So everyone tells you that getting a mortgage is you owning a house, but the truth is that you don't really own that house. The bank does, and you're just renting it from them within the time period that you're actually subscribing for with interest. So in this video, I'm going to be breaking down the dark truth about mortgages and how investors can be able to beat the system. So now, what is mortgages? Mortgages are loans that we actually get from financial institution or mortgage bodies like in Nigeria now, the MREIF, to be able to actually get houses and pay in bits over a particular time frame. So currently in Nigeria, we have mortgage plans up to about 20 years. These mortgages actually come with interest, so they come with single-digit interest rates. Like in Nigeria currently, the MREIF is giving you 9.75% on interest on your mortgages that are going to be paying for over that particular time frame. But what I want investors to understand is, now let's say you make like a minimum 10% of a 50 million naira house, that is 5 million, and then you're actually taking a mortgage on 45 million naira, spreading it for 20 years. So what that implies is you're actually spreading it for 20 years, and the interest on your mortgage is 9.75% annually. So mortgage interest is not something you pay like that 9.75%. You're now spreading 9.75% for that 20 years. No, you're going to be paying 9.75% on your property every year till the year of completion that you have actually decided to go for. So if you're actually going for 20 years, you're going to be paying 9.75% of that 45 million naira for the next 20 years. And you know the implication of that. The implication of that is that at the end of that 20 years, you should have ended up paying more than twice or almost twice the original cost of that property. So let's say a property is 50 million naira. At the end of that 20 years, you're looking at paying over 100 and something million naira in total cost for that particular property. So mortgage is actually making you buy a property twice the original value of that property as at the time you are buying it. Do you get? So this for me is something that doesn't really sit well with me, and I'm sure for many investors too, it might not really sit well with them, because you are buying that property now and you are going to take possession of that property, but at the end of the day, you are paying twice the amount you're supposed to have paid for that. Like you're supposed to pay 50 million naira, but you're ending up paying over 100 million naira for a 50 million naira house because of you actually subscribing to a mortgage plan. So now, at what scenario is actually going for mortgage beneficial to investors? At what scenario would investors want to jump in? So let's say for a 20 years plan on a 50 million naira house, you are looking at a monthly repayment of about let's say around 420,000 naira monthly. The only reason how you can be able to beat the system is that, okay, let's say you are getting a 50 million naira house. The house should be able to pay for itself. The house should be able to sort out its mortgage responsibilities and its mortgage dues. So let's say you are going for a 50 million naira house, and then you are paying for 500,000 naira monthly. 50 million naira house, 500,000 naira monthly repayment for the next 20 years. So for over a period of 12 months, that means you are going to have to pay like 6 million naira in mortgage to the bank, for the bank you actually subscribe to the mortgage for. So if you are a house of 50 million naira, you are paying 6 million naira to your mortgage plan annually, right? So the house must be able to pay its mortgage and possibly still give you return on investment while you are still paying for your mortgage. So if that house can be able to be rented for like 7 million naira annually, right? Okay, so I'm buying this house of 50 million naira, is due to give me 7 million naira annually, and I'm paying 6 million naira annually to the mortgage plan, and then I'm keeping 1 million naira to myself, and I repeat this cycle for the next 20 years. Yeah, doing this, the house have been able to pay for its mortgage and also pay me as an investor. Is a win-win scenario, even though that I'm going to end up paying times two the value of the property, but the house actually paid for its own mortgage and still gave me the investor interest. At that point, you have been able to beat the system. But the reality check is that most of those houses in Nigeria, a 50 million naira house in Nigeria will not be able to give you a yearly annual rent, because Nigeria rent is actually annually, except you are doing Airbnb. Even with Airbnb, you will not still be able to meet up with the yearly requirement, and more has just been the challenge with the mortgage system that I personally perceive that, okay, if I'm going to be getting a mortgage for a house of 50 million naira, I'm going to end up paying times two for or I'm going to end up paying times 50% of the value of the property for within that particular time frame again, the house must be able to pay for its mortgage responsibilities and still have a token for me to be able to use for maintenance of the house as time goes on. So I get a house of 50 million naira and I'm obliged to pay 6 or 5 million naira, let's say 5 million naira now, and now I'm obliged to pay 5 million naira annually on that house for my mortgage. That house should be able to generate me 6 to 7 million naira annually, so that it can be able to pay for a mortgage plan and also be able to now pay for the little maintenances that I'm going to be using while keeping them. So at this point, this is where it now makes sense to an investor and to investors that actually want to subscribe into the plan. So I think anything aside this, you are actually not beating the mortgage system and is not actually a fair play. I've been Engineer Emmanuel, and this is just me sharing my 2 cents on the mortgage system. So see you on the next video.